Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into a proxy statement from Nauticus Robotics. That's Nauticus Robotics, and it sounds like they're asking shareholders for permission to shake things up. And that permission might include doing something that's like turning 911 bills into one. But we'll get to that later. This isn't your typical quarterly earnings report. It's a document outlining what shareholders will vote on at their next meeting. Think of it as a menu of changes the company wants to make. We'll break down the key proposals, what they mean, and why you should care. First, the basics. The annual meeting is scheduled for June 9, 2025 in Houston. Shareholders will be voting on 5 key items. Get ready because that's where the $1 bill becomes a bigger bill, wink wink. Item number 1 is the election of a Class 3 director. Basically, they're filling a seat on the board of directors. The board is like the company's governing body making important decisions, so you want to know who these people are. Next, they're asking shareholders to approve their choice of accounting firm, Whitley Penn, for 2025. Accounting firms keep companies honest, making sure the numbers are accurate. It's important to see if the board's choice is solid. Here's where things get interesting. The third proposal is to increase the number of shares available in their employee stock plan. They want to be able to offer more company stock to their team as an incentive to work harder. This can be good because it aligns employees' goals with the company's success. They want to add 1,762,699 shares. That is a lot more shares available for their employees. Now, this is the big one. Item 4 is a proposal to authorize a reverse stock split. Remember that turning 9 $1 bills into one, it's similar to that. The company wants the power to combine existing shares of stock into fewer higher priced shares. They're asking shareholders to trust them to split between 1-for-2 and 1-for-9 ratio. Why would they do this? The price of their stock is very low. They want to raise the price in order to avoid being kicked off the NASDAQ. Finally, there's a proposal to allow the meeting to be adjourned or postponed if they don't have enough votes for the other proposals. It's like saying, if we don't get enough votes now, can we have some more time to convince people? Before we jump into the financial implications, I want to share something the board made a note to include, which is about diversity as of April of 2025. All directors were men. In 2024, there was at least one female director. What did the auditor charge them? Let's find out. For the year ending in 2024, the fees were about $827. These numbers tell us how much they paid the people making sure the company is accounting for their money correctly. Who owns this company? Well, at the time of the report, ATW Special Situations ILLC owns 26.9% of the class, and Material Impact Fund 2 LP owns 11.1%. Let's look at some of the payments to the board of directors. Jim Bellingham was paid close to $180,000. William Flores was paid about $233,000, and Adam Sharkawe was paid about $183,000. And added is just for being on the board. What do the executives earn? Here are the total shares granted under the plan get in 2023. Named executive officers had only 40%, but in 2024 that award grew to 83%. On the other hand, other employees were 16% in 2023 and 0% in 2024. Let's find out what the executives earned. John Gibson, the Chief Executive Officer, earned close to $2 million. John Yamakoski, the Chief Technology Officer, earned about $35,000. The General Counsel earned close to $125,000, and Nicholas Bigney, the former General Counsel, earned about $425,000, and Nicholas Bigney, the former General Counsel, earned about $65,000. And Nicholas Bigney, the former General Counsel, earned about $465,000. The board of directors listed some risks about going through with the reverse stock split. One of the big risks they say is that the price per share of our common stock after the reverse stock split may not reflect the ratio implemented by the board of directors. This is a big one because the board knows that the reverse split may not increase the price of the stock. Some investors may view the reverse stock split negatively. This can make investors not want to invest in the company. Following the reverse stock split, we may still run the risk of non-compliance under the listing standards. It means the company may end up delisted anyway, and this change may not even be worth it. So let's zoom out. Nauticus Robotics is asking for some significant changes. The increase in stock options for employees is standard to attract talent, but the real head turner is the reverse stock split proposal. If they get approved, it gives the board the power to dramatically change the appearance of their stock price. It's a gamble, but they believe it's a necessary one to stay listed on the Nasdaq. It is up to shareholders to decide if they trust management to make the correct decision for their investment. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, hit that like button, drop a comment, and subscribe for more plain English explanations of the corporate world. Until next time.